Well, while things on the equity side of things have been tapering off to the downside, the bond market seems to have had a pretty flat performance over the last while. Run us through the kind of activity you're seeing on this front where one would have expected to see some demand.
Good morning, Alishia. Over the last few days and weeks, we've been seeing a lot of performances on the short end side of the fixed income market. Most of the market players have now been moving away from the long end of the market as the 20-year instrument. The concentration in recent time has been between the 2 to 3 year instrument. And if you look at the result from the beginning of last week till now, you see that yields are dropped across the short end. But on the long end, we've seen some gains. We've seen most of the PFAs coming into the short end of the market. And I think it's just the issue of risk management, because most people feel that the long end yield should actually, if you look at it on real-time basis, be above inflation. But right now, most of the yield are still slightly below inflation, and that's why you've seen a lot of movement towards the short end of the market.
Well, we've seen Nigeria distribute $4.7 billion in revenues and windfall oil savings to government in July. Now, that's a massive dispersal, which many say is likely to trigger a drop in bond yields and interbank rates this week. What are you anticipating in this regard? Because some have gone as far as saying that they expect interbank rates to crash latest by today.
Well, it would be a wrong assumption to think that the 4.7 billion is going to come into the system in July. Let me take you back to May. The account balance in the excess crude account as at May was 4.7 billion. As at the last month, it was 3.6 billion. What has been approved this month is that 2 billion is going to come in to be shared among the 3 tiers of government, and 1 billion is going to be kept aside for the sovereign wealth fund that is yet to take off. And again, the other thing to look at is that this money is being shared among the 3 tiers of government. So it's just about 49 or 48% the shares of state and local government that will hit the system. The other 50%, so it will be kept in the central bank and disbursed on a need-to basis. So you don't expect that everything is going to hit the system at once. So we might not see that impact the way people expect that it will crash. But if you ask me, where are interbank rates at the moment? They are already at 1%. So we've already seen the crash. It's just that in a long time, yields might not rise the way people expect.
Of course, this entire dispersal, even if it is happening in the phases like you've outlined, comes 5 months before presidential and parliamentary elections, and government spending has traditionally risen in election years, so no surprises on that front. What we are starting to see, though, are questions around quality of the expenditure. Do you share those kind of concerns?
Well, in an election year, you hear a lot of rumor, you hear of capital flight, you hear of increased spending, you hear people wanting to spend because their tenure is over. Those concerns are very real, and I guess it's something we need to look at. But again, if you look at the budget, the supplementary budget that was approved, I doubt if everything will be spent this year. Last year, the central bank kind of increased its accounting year to March. And there are also rumors that it's likely going to happen again this year, that they're going to increase it to March. So some of this supplementary spending might not be things that we'll spend in this year budget, but might dovetail into March next year. And so the kind of liquidity of spending you think will happen between now and December might really not happen.
So that pretty much answering the question on whether Nigeria has the capacity to absorb that kind of spending, in that we may not well see that kind of spending actually filtered through. With these hefty withdrawals that we've seen from the country's crude oil savings account, are you concerned about the levels that remain in that account? Because we are seeing some of the largest monthly dispersals issued, in theory, ever.
Well, I agree with you. I share your concern, because the excess crude account is meant to absorb shocks, externalities that may happen and we don't know. Right now, the balance in the account will be about $400 million, which is a very low, which is very low. And if we should have any externalities or shocks right now, I mean, where are we going to have that capacity to absorb that? Our government should be, they should start looking at long-term projection, looking at the future, as opposed to short-term needs and wanting to sort themselves right now. So we must be forward-looking in anything we do.
On the currency front, it's in this context that we've had the CBN auction yesterday. What were the results there, and what impact did it have on the interbank market itself?
Well, yesterday the central bank had $200 million on offer. The total demand was 305 million, and they sold 200 million. I guess the central bank has not increased this offer because there are oil companies in the market. So the central bank in recent time have been monitoring the flows from the oil companies, and that kind of restrict them in the amount they are offering to the market. It's not because they do not have the liquidity to be able to meet $300 million. All they are doing is trying to respond to the flows that are in the market right now. And the immediate impact on the interbank market, because the central bank devalued by 11 kobo, we saw the market also moving from 20.30 on 150 to about 55, 65 on 150. But if you ask me what my outlook is on that, I think for this week we may see a drop because the likes of Shell and Chevron are in the market. We may see a slight drop, and next week we expect all the oil majors, all the oil companies to also be in the market to sell dollars to meet their working capital need. And that will further bring, we might see it coming back to 150 figure or go slightly to 149, 80, 90.
So, Samuel, we've got these various forces at play, while there's a shortfall in supply from the central bank's auction putting pressure on the dollar's availability in the interbank. We've got sales being expected to be driven by these oil majors, as you've highlighted. What's your broad overall outlook for the Naira by year end, because this unit has been trading within the band of 150, 151 for the longest while now?
Well, if I look at the flows from the oil companies, the supply of dollars from the central bank, I think that they are going to maintain stability. I don't see it moving out of the band it has been since the beginning of the year. So if you ask me and I want to take a range, I would say the Naira dollar should remain between 150 and 151 till the end of the year.